right. Good morning and welcome to Coffee with Markus here on the Tradier Hub. This is the show where we talk about trading the way how I trade. I'll show you my current trades and we will have a coffee together. And I have my favorite mug this morning that reminds me always that everything is good, 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 and you have got this. So, if you have been following me, you know that I'm a big fan of trading options, and here in particularly, I like to trade the wheel strategy. So let's jump on the charts and I'll show you a very current example. One trade that I did today, this morning. So let's take a look at this. First of all, with the wheel strategy, we have three steps. Number one, we're selling put options and we are collecting premium. Number two, we might or might not get assigned. And based on this, if we do get assigned and we now own shares, then we can sell call options. And at some point, we'll get called away and then we start it over. And this is why this thing is called the wheel strategy. So here's what happened. Right now, we are seeing the chart of the IWM. This is the index mirroring the Russell 2000. And you can actually sell options on this ETF. And this is where last week I sold the 169 put options because I've identified that there is some support and we see that there's also some resistance right up here. So IWM has been trading very nicely in this range. So if you zoom in a little bit here, then we see that the 169 was a little bit more aggressive because as you can see, zooming in here, we have been trading as low as 162. So that is where you really see support. But I said, you know what? 169 is a level that I'm comfortable owning this ETF that is mirroring the Russell 2000. So I sold the 169 and I sold it for 82 cents, which is $82 per contract, and got some good premium here. So again, this is the 169. Super, super, super interesting. So here's what happened. On Friday, IWM closed at 169.11. So I was kind of like, nah, probably don't get assigned. It's not as much fun. But then I saw that I did get assigned. So how can this be? Well, let's talk about this. First of all, when I'm selling a put, somebody else is buying this put. What does it mean? If you're buying a put, it means that now the buyers of the put can sell shares at a price of $169 to me. Now, options buyer always has the right, but not the obligation to do it. I, on the other hand, since I'm the seller, I have to buy the shares from the put buyer if he or she decides to exercise this option. Now, surprisingly, this put buyer decided to exercise the option. Here's the deal. Markets close at 4 p.m. Eastern time on Friday. However, the option buyer has up to 90 minutes, depending on the broker, to inform the broker that he wants to exercise it. Now, most broker will exercise the option automatically when it finishes in the money. So for me, if IWM would have closed at 168.11, the broker would have already exercised this option for the put buyer and would have assigned me. But here, since it was above and it was at 169, let me just get rid of this 11. This is where apparently the buyer decided to notify the broker after the close and saying, please, I want to sell these shares. And the broker looked around and there's a round robin, right? I mean, there's not really that they're looking like, oh, let's see if we can find Markus here. No, I mean, this is all just randomized and there's a certain algorithm that picks then the guy who needs to buy the shares from the put buyer here. And in this case, it was me, where I was very, very happy because I woke up this morning, 2 shares in my account. So this is where, going back to the wheel strategy, number one, I did sell puts and I collected premium. I collected 82 cents or $82 per share. Now I got assigned. So what do I do now? Now I'm looking to sell calls. And this is where I looked at my calculator here and I wanted to see, okay, how much can I actually get when I'm selling calls here against my shares that I got assigned at 169? And I'm zooming in here a little bit. So on my calculator, I just enter the stock purchase price. I'm looking for this Friday's expiration. As we are recording this, it is, what is it? Monday, November 13th. So there's 4 days to expiration. So based on my account size, there's 1,200 shares. The strike price, I want to see if I can sell it at the strike price where I was assigned. And so in order to get my 30% annualized, I would need a minimum of 70 cents. And here's what I saw. Earlier this morning, I could already get $1.52. But I said, you know what? $1.52 is nice. What is even nicer is to get $2 in premium. So let me just show you this, because then I would get an additional $2 per option sold. So keep in mind, when I was selling puts, I was getting 82 cents, right? Now I'm getting another $2. So this means I'm getting $2.82 or $282 per option traded for kind of already getting rid of IWM. Now, of course, I have to wait until Friday, because now that I'm selling a strike price of 169, if by Friday IWM is trading on Friday's close above 169, I get called away. So in this case, I'm getting receiving all the premium, or I keep to get it because I receive the premium the minute I sell these options. So I can keep all of the premium. I have no buying power tied up, and I can start the wheel over again. So this morning, when I saw that IWM started moving around, so let me just show you on a 5-minute chart here what IWM did. And as you can see earlier today, at first, it was moving lower, but then it started to turn around. So I said, all right, let's see. I could easily, right here, when it was trading right around here, I could get $1.50. But I said, you know what? Let's see. I do believe that we will fill this gap, which we did, and we even pushed positive for the day. So you can see right now we are still up 0.1% in the IWM. So I put a limit order in the market where I say, okay, I would like to get $2 per share. And this has happened. Now, what implications does this have for my trade right now? So we're going back to the chart. And you see already here, oops, gonna zoom in a little bit so that we see it better. So you see, I did get assigned at 169. That is my cost basis. My break even, however, is the strike price minus the premium that I received. And I was wrong. I didn't receive 82 cents. I actually received 83 cents. So this means that on Friday, going into today's trading session, my break even has already been 168.17. Today, I received another $2. So this means that we can deduct this premium, which means that right now, my break even is at $166.17. And that's a beautiful thing, right? So by just selling the premium and not doing anything with the stock, I mean, on Friday, I was forced to buy the stock at 169. This Friday, I might be forced to sell it at 169. So in theory, I wouldn't make any money on the stock. However, as you can see right now, since I received the premium, it is almost like selling it for 169 after buying it for 166.17. So this means, did I do this right, the math? Yeah, I did. So this means exactly that I'm having this $2.83 that I'm making per share trade. Now again, based on my account size and trading 1,200 shares. So this is like what, 1,200? Let's use the handy dandy calculator that we do have on our phones and see that this is 1,200 times $2.83. Oh, wow, that's not bad at all. That's $3,396. And here's the really, really, really cool thing. I don't have anything to do for the remainder of the week, right? This is why it's a really lazy way to trade. And I'm loving this because right now my brother is visiting me from Germany. And therefore, I like to spend some time with him. And I'm already done with my trading because all I did this morning is selling calls against my position. Now, I do have some other positions where I'm not able to sell calls just yet. For example, CSIQ, NEE, PNC, or even UPS, because you see at UPS, as an example, I got assigned at 157.50, and right now it is trading at 139. Now, my break even, as you can see, because I did already sell premium a few times, so I sold options, is at 152.14. So, but I'm still ways away. So UPS, we have to give it a little bit of time. And this is one of the cons of this wheel strategy. If you do get assigned and the stock moves lower, as UPS did, you have to wait until it comes back. But you see, this is pretty much what I think you have with any stock, right? I mean, if you're buying a stock and it moves against you, you have to wait until it comes back and moves in your direction again. So pretty much the same here. And this is the wheel strategy, and I'm loving trading it. Now, because I like to trade up to 5 positions in my account. So as you can see, I have 1, 2, 3, 4, 5. This is why I'm not looking for any other trading opportunities today just yet. But if I wanted to, as you know, there's 3 ways to do it. I can either check the scanners, or I can check the watch list, or I can check the heat map that is hiding behind here. So there are 3 ways to do this, and I explained this in a previous video. So you'll find it here on the Tradier Hub, right under the Coffee with Markus show. And this is where I talked about how to find the best stocks. However, today, I just wanted to show you a real life example. So we will see how it ends by the end of the week if IWM stays above 169. If so, I'm getting called away because, again, I sold a call, and this means that somebody who bought, right, so who bought the call has the right to buy the shares from me at $169. So, of course, if on Friday the price of IWM will be at 172, anywhere actually above 169, it does make sense for the person who bought the call to say, hey, sell me these shares for $169, and I'm selling it right away, let's say at 171. I mean, this is what options buyer do. They expect the markets to have a direction. For me, it kind of doesn't matter because I received my $2.82 in premium already, no matter what the markets do. As an example, if on Friday, right, we have 2 possibilities. If IWM is above 168, I get called away, which means that now I have a slot free and I can sell puts again. If it is closing below 169, this is when my call that I sold expires worthless, and I can sell more calls next week. So that is the cool thing, and this is why it's called the wheel strategy, because like a wheel, it's going round and round and round and round. And you see, no matter what IWM does, whether it moves above 169 or below 169, I win. That's what I like about it. I don't have to predict the direction of the market because either way, I have a plan of what to do next. So if there are no questions here, do me a favor and leave questions in the comments if you want to, and then also make sure that you're setting an alarm for next Monday at 12 Eastern time, 11 Central time, when I'll be back here because we can continue the trade and see what happened here. So until then, I wish you a wonderful week. I hope that this is helpful. If it is, there's a way somewhere to give me a like, please do that. Feel free to share this video or the Tradier Hub with anybody who you believe might benefit from this. And then I'll see you again next Monday. Have a great rest of your week and make lots of money. All right. Take care, everybody.